Morning. Good morning, good morning, good morning, everybody. Give me 1 second. Go get my goodies on over here. Make sure I'm on. All right. There we go. My water over here. Happy Monday, or Monday. Happy hump day, rather. Oh, my 2 days behind at the start. Happy Wednesday. Good grief. On that note, I'll have another shot of caffeine. 6:30 a.m. here in Kansas City. January 28th, hump day, FOMC day. We got some FOMC stuff happening, guys. Let's get my charts up and running here. And we'll take a look at the day's high impact events. Get on over here. And here we go. All right. So just a recap of yesterday. Okay, yesterday being Tuesday. The Australian dollar did have their inflation number come out, which came out a little warmer than expected. So from a 0.7 on the forecast to 1% on the dot for the month-over-month number. And that's after having a 0% the previous period. So warm for the currency, good for the currency, but negative, obviously, for the Australian stock market, right? Because it's got the opposite effect. Same thing for the year-over-year number. Okay, they went from a 3.4. They expected a 0.1% increase, but they got a 0.4% increase. So that's just all around good numbers for the currency, the Australian currency. And then again, negatively affects their stock market. So that's kind of a recap of the after hours events that we had here in the States. And then today we do have Canada's rate release as well coming up here in an hour and 15 minutes. Where they're expected to remain the same as well, 2.25 rather, 2.25, with their presser to follow 45 minutes afterwards. And then also the dollar. Here we go, the big one of the day. Okay, 1 p.m. my time, 2 p.m. New York City time or Eastern Standard Time, projected to remain the same as well. I did put a poll question on there, guys. Do you think that this FOMC decision is going to stop the downwards bleeding of the Dixie of the dollar or not? So yes or no, simple response on that in the chat. Okay, I'm gonna try to start getting into some more of these questions, poll questions and such. Help have you guys more engaged with me. Again, I'm a trader. I'm not so much a tech guy, but I am starting to figure out a few more things on the YouTube side, YouTube Studio, and other things like that. So, yeah, let me know what you think. Be interested to know. Just a real simple answer, yes or no. Do you think it's going to stop the bleeding, meaning it's going to stop and or move up, or is it just going to continue down? That'd be a no. Okay, so let me know what you think on that. And outside of that, we do have crude oil inventories coming out as well, if anybody trades oil. Okay, last period was 3.6 million barrels. Looks like they are projected to the negative side today, minus 0.2%. So as always, guys, if you do trade oil, okay, if the actual number is less, then that's good for the currency. So less supply means higher demand, means higher prices, right? So just keep that in mind. That's the oil inventories coming out later today. Basically, yeah, right at the same time the BOC press conference is for their rate decision. So that's that's the main ones for the day. Japanese consumer confidence number is coming out later tonight, but it is more of a light impact event, yellow folder. What else we got, ladies and gents? And for both of these rate statements coming out today, I will definitely get a readout of those, and then I'll bring those to the stream tomorrow morning, and we can talk about it. Okay, I'll just do like I normally do. I'll take the whole speech and condense it down to about a half-page summary or a quarter-page summary, because really what we care about is the main highlights. Any new major shifts going on, and then most importantly, guys, are they dovish or are they hawkish cuts, or unchanged results in these cases? Because in these cases, they're supposed to remain unchanged. So we want to know, is it hawkish or dovish? Right? That's the big thing to come out of these. In other words, are we going to have more rate changes, rate hikes, or unchanges? Because that affects the currencies, the underlying currencies, whether or not it's going to go up or down in the foreseeable future thereafter. So that is it. As far as Australia, though, just to kind of go back to yesterday evening and taking a look at the macro data over here, the heat maps, just going and pulling up Australia dollar. Again, that was the CPI number. So let's take a look over here. Okay. Obviously, it was good numbers. Forecasted was 3.6. Actual was 3.8. That's for the year-over-year number. That's what the Edge Finder tracks on the inflation gauges over here, is the year-over-year number. So obviously that's hot. There's your bullish signal from January 28th. And last week, 6 days ago, we did have the PMI data for Australian dollar. Okay, in both of those instances, it was bullish numbers. Remember, we're in expansionary territory in the Australia dollar. So that's a good thing when we're talking purchasing managers indexes. So that's good for the currency. And then unemployment rate, okay, they're last week, of course, they did go from a 4.3 to 4.1, but they'd expected it to go 0.1% higher and got the opposite. So all in all, Australia is looking really good, guys. 85%. So it's only missing on one report, and that's from early December. That's their growth number. That's their GDP number. That's a quarter-over-quarter number. So we'll get that new report out here in another month and a half or so. Okay. So that's just going to remain a bearish number, at least for the next month and a half, until we get that new report come out. I don't know the exact date when that comes out, December, so January, February, March. I'm assuming that's the 1st of March, right? So just keep that in mind. But other than that, Australia is looking pretty damn sexy right now, I got to say. Would you agree, Algo? How you doing, Algo? Good to see you, my friend. So, yeah, needless to say, Aussie is one of those currencies. If you're just isolating the fundamentals, it'd be a good one to match up with a weak currency. And what do we have as a weak currency right now? It's really just mainly one. It's really just one. It's the Swiss franc, right? Remember, if we go look at the Swiss franc over here, just from a fundamental standpoint, it's missing on everything. Now, the most recent report we had was the services PMI. That was back on the 23rd, so that was 5 days ago, where they did have a miss from a currency standpoint. So they're in expansionary territory on the services number over there, but they missed. They had a forecast of 52.6. They missed it by 0.7. So quite the miss on the services sector. And also the manufacturing sector, as a reminder, is in contractionary territory because it's under 50. So just not a whole lot going right for the Swiss franc from a fundamental standpoint. Okay, this is the hard data. This is what the commentators and the talking heads on CNBC and all the other financial stations, this is the stuff that they're talking about. Okay. You guys hear about the geopolitics of the world, the wars, the tariffs, the this, the that. Some of that stuff's just rumor at this point. We don't know. We don't have any hard facts on that stuff. Until it's actually implemented, it remains just a talking piece. But this is the hard data. Okay? Talking about the U.S. dollar over here. This is the hard data. This is what they're talking about. I try to periodically say this, but they're not talking about a 5-minute or 15-minute head and shoulders pattern, okay, on the chart, or moving average crossovers, or this or that. Talking about the facts, the hard data. And just to look at the dollar over here, the last 7 days, just had the GDP number come out, just had the jobless claim number come out, which both were bullish numbers. PCE gauge is neutral. So dollar, just a quick recap on that, 63%. But just because this is showing a bullish, this is tilting slightly bullish, doesn't mean it should be going straight up, right? Not necessarily. Okay, because what is the dollar doing? What is the Dixie doing right now? It's just going straight down. go up to the Dixie over here, a daily chart. And we did successfully go through that daily demand zone I talked about the last couple days, because we kind of nibbled into it on Monday. And then yesterday, we just completely blew through it, talking about this daily demand. So just to remember, okay, we usually get reactions, but just because it's just because it's a demand zone with a decent move away and a break of structure doesn't always mean it's going to work. Okay, especially when you got the threat right now of the Japanese yen intervention. The yen intervention, I called it affectionately on my video yesterday, my shorts video, or my news piece video. Okay, yen intervention. So that's just basically taking all the data out of the picture at the moment. Anytime you have a central bank, buying or selling its currency, it don't matter what this info over here says. Okay. Now this is the dollar, but the same as but when the Japanese yen has been getting bought up, okay, quote unquote, hush hush, then that has an adverse effect on the dollar. Okay. So let's look at the JEXI, the Japanese index. Look at this thing. The thing's just going crazy over the last 3 days. Okay. I mean, that's just obscene. That's quite the hike. And I talked yesterday about the fact that I could see this thing continuing to go up, at least up to this supply zone up here, guys. Pretty decently strong resistance up here. So we got to be aware of that. Yes, the yen is climbing like crazy, but we could potentially get a little bit of a bounce here. Now, like I mentioned yesterday, I'm not saying it has to go in here and just completely go through, but I would at least expect it to come in, maybe get a slight rejection of some type before continuing, something like that. But just like I mentioned yesterday, this thing could just bounce, come all the way down to the next demand zone, okay, which is all the way down here. You just never know. So it's just places to be aware of, okay, when we're talking about the higher time frame, support resistance lines, supply and demand zones, however you want to look at it. But yeah, JEXI up, Dixie down. Okay, a little bit of a inverse relationship going on right now. Just taking a look at the volatility index, it's still back down here at normal. Remember, we had a slight increase the other day whenever whenever Trump was speaking with in Davos, and then he put the rumors to rest when he talked about not bombing Greenland, and then they kind of came to a bit of an agreement on the tariffs between the U.S. and the Eurozone. So as soon as he came out and affirmed that, that's when everything kind of dropped back down here to normal. This is the volatility index, or the scared meter. Okay, some people call it the scared meter. This is scariness up here, meaning traders are all over the place, freaking out. Right, talking about these levels back here in the past. Okay, the Liberation Day. Remember Liberation Day, when Trump was putting on the tariff or talking about the implementation of the tariffs. Okay, a lot of scared investors back here. I mean, you can go back in time and see all kinds of different things. Let's go back a little deeper to. Okay, here's your COVID over here, your COVID spike. Everybody freaking out because of what the heck's going to happen to the markets and everybody in life and everything, right? So anytime you see those spikes like that and they grow 40, 50, 60 or more percent, or in this case for COVID, like 85, I think it was, right? That's where everybody's just running around with their hair on fire. The world's caving in, right? That's the themes. But yeah, even with that little subtle, freak out that they had about Greenland and other tariffs, it pales in comparison. The freak out meter, there's a good word for it, really pales in comparison to some of these past events. Okay, COVID, Liberation Day, and all that. So anyway, looking pretty decent on the VIX. Speaking of Australia, okay, having a good currency. Look at that, spiking pretty high. A lot of this stuff is just as an indirect effect of the the rate check, okay, or the beginning stages of the intervention, whatever you want to call it. From the JEXI, but a lot of these other currencies are getting some reactions to it as well. I mean, there's your yen. Okay, just reset that. I'll just zoom in a little bit. So yeah, there's your yen Let's look at some of these other currency indexes. There's your Swiss franc index. Okay? That's skyrocketing as well. New Zealand, okay, the Zexy. Swiss franc is the sexy, by the way. It's kind of a fun little word for it. Sexy, Zexy, Jexy on the Japanese yen. The euro's going up. The Dixie's going down. Canada's going up. Pound, Aussie. Look at that. So basically, all the other major currency indices are going up, while the dollar is going down. So when it comes to today's FOMC statement coming out at, again, 2 p.m. New York City time. This is 1 p.m. Central Standard Time, my time. Is this going to put a stop to the bleeding? Is it going to throw a wrench in it? Is it going to maybe take some pressure off of it? Is the bottom end of this monthly demand zone going to kind of get a bounce? We shall see. We shall find out. As always, and by the way, speaking of the drop on the Dixie, it did come to the bottom of that pitchfork that I drew up way back when. As you can see here, it's in the daily demand, or the monthly demand. But it looks like it's already kind of touched the bottom end of that bottom end of the pitchforks, has it not? So could that provide a little bit of relief for the dollar? Okay, see, it bounced in right there. Just odds enhancers. I mean, we did get a pretty good wick, right? So there's your daily chart now. We have gotten a little bit of a bounce. We got a wick through it, and then a close above it. So could that potentially be the start of some relief? We shall see. Okay, there's your 4-hour candle that wicked down into it. So yeah. I mean, I would think about it. So we are expecting the 3.75%. So is this overstretched to the downside? 3.75 on the interest rate decision. If this comes out as is, I feel like it's going to get some type of a bounce upward. Okay, that's not financial advice. Okay, the whole spiel you hear anytime you watch a trading video, that's not financial advice. That's my guess. That's my guess because of the hard data. Okay, the fact that it is giving us a nice bullish signal from the hard data, the economic data. So what else have we got? Let's look at the top setups real quick. So remember, we got quite a few goodies on. Let me make sure my thing's plugged in. 1 second. Oh, I didn't even plug in my laptop. Give me 1 second. Turn off my space heater while I'm down there. It's hot. All right. Yeah, I take my laptop and I take it into my living room to watch TV. I hook it up to my TV in the living room with my HDMI cable. I do that because on my laptop, I have a website I use for watching movies or TV shows. And I only pay like $9 a month, guys. This is, I don't know. It's kind of a steal if you ask me, but any movie, any television show, anything you want to watch. And I don't watch much TV, but every now and then I like to relax in the evenings, get the heck off the computer. Because if it's up to me, I'll stay on this damn thing all day and all night. So I try to force myself, in the evenings to get off of it. What's the name of it? Movies.do, I do believe is what it's called. Movies.do. I'll look it up here in a minute and see if I can put a link in the chat. But yeah, $8.99, $9. Okay, that's here in the US. It may be $1 or $2 difference, and it may not even be available outside of the US. I'm not even sure about that. But yeah, I did watch a really interesting series. Coach Richard, that was on my streams with me at Ola Prime, recommended it. It's called Landman. So really cool because of the kind of seeing the economics of the oil industry. Okay? It was a really cool show to watch. So anyway, Landman, if you haven't seen it, really good short series, 2-season series. So anyway, I digress. New Zealand Swiss. Okay, these New Zealand pairs are still at the top. Okay, that's the most bullish pairs right now. So let's take one more quick look before we get through the top setups. I wanted to look at New Zealand over here. Okay, the currency itself. So it's right there with Australia, guys. It's sitting at 83.3. It's only had the one bearish number, and that's from almost a quarter ago at this point. Okay, that's the PPI, quarter over quarter number. So that was back in November 18th. Everything else has been pretty bullish and exceeding expectations. So just remember, that's outperformance, economic outperformance. Whenever you have these releases right here, okay, exceeding expectation, that's called economic outperformance. So yeah, New Zealand dollar, and we'll just go look at all the currencies as a whole here real quick on the surprise index, which is awesome, guys. This is what Trader Nick kind of created and updated from the original economic surprise meter where it showed all the currencies. Now he's got it on here. He's added in the Chinese yuan. He's added in the South African rand. Just a couple other, large economies as well. I like the fact he added the Chinese speed gauge on here, like as Coach Richard affectionately called it on stream with me, because obviously it's the biggest trading, one of the biggest trading partners with Australia, New Zealand as well. So it's kind of has that indirect effect on the Aussie and Kiwi dollars. So I like the fact that got added back on here, but it's just cool to be able to take a look over here. He edited it this way, adding in kind of a history gauge as well. This is what I requested, actually, guys. I actually requested him to add this in just to see a, kind of a running average of these. Hey, are these increases trending up? Are these decreases trending down on the individual currency? And it was ironic because he said he was already working on this. So great minds think alike, but I like this a lot, especially when you look at the British pound, just as a perfect example. So right now it's sitting at 67%. But back here, if you guys remember a week and a half ago or so, I was talking about how it was down in the dumps pretty close to the Swiss franc. Okay, it was down there at like 33%, I think it was. Yeah, there's a 33 right there. Actually, how far back can I move this? Because I think it was lower than that. Let's go back. Let's go back a couple more. Oh, yeah, that's right. Well, he just created it back here. So it's just got to, have more days accumulate to get more data. But anyway, you guys see what I'm looking at, this dark green, like hunter green line, okay, for the pound. I mean, this thing was all the way down in the dumps. And then all of a sudden it had a string of good data talking about the British pound. And it spiked up at one point to the very top. Okay. All that in a span of 2 days. So there you go. January 22nd. Excuse me. In 2 days, guys. In 2 days, this thing went from the second worst to the strongest. Now it's obviously balanced out a little more with some other currencies, but this is what I wanted to see right here was anytime we had a currency just spike up like crazy. In other words, it got a lot of strength just like that. And he made it. Now I just think I think this is awesome. I mean, this thing gets better and better every time. Guys, if you don't know what I'm talking about, as always, the Edge Finder, it's from the A1 Trading. Just go over here to a1trading.com and you'll get more information on that. And oh, by the way, while I'm here, I'll be on Trader Nick's live stream, as you see right there at 12:30 Central Standard Time. So basically a half hour before the interest rate decision comes out. Okay. So I'll be on there giving a little 30-minute piece. He's been kind enough to invite me on once each week. Okay. So I'm kind of one of his little contributors now. It's kind of nice to be able to do that. But he's got a really big following. He's got like 524,000 followers or something like that. And then as soon as I finish my piece, then Chris will come on, Chris Pulver, and then Nick as well. They'll come on and they'll kind of talk through the interest rate conference, okay, the speech as it's going on. They'll let the speech run, okay, at Trader Nick right there. And again, just go to his live channel, and there's going to be the live right over here. Okay. So just go check that out if you're looking for something beyond my stream. And also, while I'm here, just to bring this full circle, keep in mind we still do have Coach Adelina. Okay, she still has her channel at She Trades Fire. She does her live streams daily as well. She usually does hers around, I think it's something like 10 to noon or something like that, Central Standard Time. But yeah, just go check in, and she'll obviously get her new stream up and created at some point this morning. And remember, she trades things like the NQ and some of the, well, there you go, Dow 30 right there, a couple other things. And then Coach Sam, okay, Coach Sam, just go check him out as well. He's still doing this futures thing. He's just doing it on his handle, which is at Sammy Saleh Futures right here. So definitely go show them too some love, okay? Some of my colleagues over there, and check out their live streams as well. Coach Sam does a lot with the volume footprint. Okay, if you're a futures trader, which I'm actually starting to delve into it a little bit. I actually won a free futures account over the weekend because there was a prop trader fest, first of its kind, that was out, and I just so happened to win a 50K futures account. So I'm actually trying to figure out how to operate Tradeify, because that just so happened to be the company whom I won it from. And man, it's like learning a foreign language looking at a futures, futures firm trading platform, because I went to get the free platform just to familiarize myself with it. So anyway, I'm pretty excited about looking at volume footprint, volume profile, things of that nature on the future side. But right now, I'm just trying to get some other things running. Oh, let me get my stream back up and running, guys. Sorry. Get this back up and running. I saw my stream quit sharing. Okay, there we go. So anyway, yeah, just go show them some love, and I'll be on again 12:30 Central Standard Time over here on Trader Nix as well. So back to the top setups. We got Kiwi Swiss, we got Aussie Swiss, we got Kiwi Yen, we got Kiwi CAD, Kiwi Loonie, okay, Kiwi Dollar, and Aussie Yen as the very bullish assets. So that's really my top six. Anything that's a very bullish, which just basically means it's a 9 or higher. Remember, a score of 5 to 8 is bullish, and then anything that's a 9 or higher just gets the fun word of very stuck before it, meaning it's just a little bit more bullish, right? It's a lot more bullish. Simple as that. So that's an easy trading plan for me for the day, is just look at these top 6 and wait for it to pull into a daily 4-hour demand zone confluence. That's always goal number 1. Now, I don't always get that. I might get 1, maybe 2 good setups a week, okay, with the higher time frames I trade on. So it's not like I've got a trade to hop up into every single, every half hour or so, like scalp traders, things of that nature. I wait. I'm the sniper. I sit back and wait for everything to align with where I have found my personal edge. My personal edge just so happens to be the daily 4-hour. Supply and demand works on the lower time frames. It's just a lot noisier, okay? Because that's where you start getting all the other things messing around with it. The algorithms, the retail traders. You don't have as much institutional activity down there. You have the algos, okay? And you do have some bank prop traders in the smaller time frames, but for the most part, they're in the higher time frames, right? The major supply and demand areas. So that's my edge. My goal is to wake up every day and try to figure out what the banks are doing and ride their coattails. Trade like a bank. I do not want to trade like a retail trader. I want to trade like a bank. And if they're trading on the higher time frames, then that's where I want to be, right? So anyway, top 6 there for the bullish side. And on the bearish side, looks like we had finally one drop into the very bearish territory. That's your Euro Aussie dollar. So we'll take a look at these very bullish and very bearish assets here on stream today and see if we can't find anything. The dollar index is showing right there as a -7 as well. Okay, it's kind of a little bit of a weird setup with the dollar, because the hard data is showing that it's exceeding expectations on most everything, but yet it's showing on here as bearish. So, it just adds to more confusion. Is this thing going up or is it going down? So we'll see what happens after the inflation or after the rate decision comes out. Maybe we can make a better judgment on it afterwards, and then, use that to our advantage tomorrow and through the rest of the week. So anyway, let's go from the top. And as always, guys, if you have any specific assets you'd like me to look at, bump up to the top of the list, just let me know. Okay. So with that, let's go through some Kiwi Swiss over here. See what we got rolling. And always, as always, guys, I don't mention this a ton, but I do, like before shows and everything, I do like to go over here and look at my top setups. But before I go look at it, I like to just see where the indexes are going. Okay, the individual currency. Oh, 1 second. Hold on 1 second, guys. God dang it. Come on, you silly thing. 1 second, guys. This stupid thing. But also, guys, hey, are we about to bounce into a major supplier demand zone? So on this New Zealand dollar, as you can see, it's blown right through this supply zone. So it's pretty strong. Okay. And then I just like to take this box and move it over to the next major supply zone after it's been chewed through. Now, right now, we're in another one. Okay, this is another supply. So will this be the one to throw a load of ask orders, okay? A load of sell orders at the New Zealand dollar, okay? So it's just things to be aware of. I just want to make sure it's, I'm not putting on a lot of risk on a trade on a currency where the index of that currency is in a major support or resistance area. In other words, a potential bounce to the opposite side, right? Like that. So yeah, New Zealand is currently in a zone. I gotta be aware of that. What about the Swiss franc? Okay, we know it's going up, but is it got anything in its way? It doesn't look like it, does it? Nothing in the way. Not unless you want to go clear back to 2011. Okay, that's 2011. That's a long time ago. But just guys, you got to know, you got to be aware of this stuff. Even though it's way back in the past, it can still cause chaos in the future. Okay, we bounced through this weekly supply. As you can see, we got our wick up here. Now this, if I'm looking at it from a weekly time frame, that's a pretty nice strong candle down. But I don't think I'm too worried about it because it's been mitigated. Okay, 3 weeks later, we had this candle right here, wick into it. So, if there's a lot of unfilled orders there, this candle probably sucked some of them up. Now, obviously, the last thing I would be worried about is just looking at it on a daily. So monthly, weekly, daily, okay? And then just go back and, come on, scroll faster. Go back in time and see if it's potentially going to, have any daily supply zones. So this would be my last step right here. And in looking at this, I don't think I'm worried about anything, guys. Let's take a look here. I would probably not be worried unless we started bouncing into this candle right up here. So in other words, the Swissy, it's good to go. Good to go. Not worried about it. The only thing is the New Zealand dollar, remember, is bouncing into that overhead supply zone. So that's the only thing to really be aware of. Let me just get this pulled forward real quick. Hey, remember, that's my daily supply zone on the Swiss franc. Way back in time. It's a long ways away, so I'm not worried about it. So on that note, let me get this updated over here. Okay, so Kiwi Swiss. So let's go look it up. Let's go see if we can find a demand zone. Kiwi Swiss. It's going to be down here. Pound dollar, Thado? Yeah, we could take a look at that. Pound dollar, yeah, for sure. Oh, come on. Just give me 1 second here. Just got to get my edge finder back up and running over here. Come on. Come on, let's go. Let's hurry up. Okay, there we go. Yeah, we'll look at pound dollar here in a second. I can tell you it is giving me a bullish signal. Okay, we can definitely take a look, see if we can't find a demand zone on it. So yeah, if I were to do anything with it, just quick answer for you, Thado, it'd be a buy. It definitely would. Here in a second, see if we can find a demand zone on that. But anyway, Kiwi Swiss, this is our strongest asset. So got higher highs, higher lows, and look at this. And I was watching this thing yesterday. So here's the thing on Kiwi Swiss. Okay, I had identified this 4-hour demand zone here. Now, this demand zone, let me get my volume up. As you can see, that 4-hour demand zone had a pretty good push out, pretty good momentum leg that it created. It broke structure here, went up pretty far. But if you look back in time, it had actually bounced into another zone. If we were to go to a smaller time frame, there would be a demand zone here. So anyway, I was a little worried about this demand zone. The move looked nice, but did the effort match the result? In other words, did the volume match the result? Okay. Well, down here, looking at the VSA candles, they were pretty low. So I wasn't too excited about this leg out candle because of the fact that the volume ended up decreasing. So it decreased relative to the basing candle, and then even the leg in candle before that. So these candles here were pretty strong volume, pretty strong drop volume. Okay, that's these yellow candles here, these yellow VSA candles. So really strong drop. And then the volume kind of dried up. Again, relative to these candles, the volume dried up. And as you can see, we didn't have another big volume candle till this one here. But just in looking at this candle, this candle, this candle, that's pretty light trading activity. So I didn't feel that was a very good institutional type candle, even though it visually looks great. Remember, you got to have effort match result. You got to have the move match the volume or the trading activity, the tick volume, right? So because of that, when price entered the zone, I wasn't quite sure about it. I wanted to wait on a confirmation entry. Okay. But the challenge was every time price was chewing through this zone, it kept making lower lows. Okay. So it kept making lower lows. The real bodies themselves were closing lower. You did have this candle close a little higher, but not with any volume. So the effort did not match the result, right? Even though and it looks red, but it's actually a green candle. If I just turn off this tool, okay, so green candle, but still that candle had yet to break any structure to the upside. And you see, I got a red supply zone box, and that's because I basically drew up I think a 15-minute supply. Yeah. So I basically drew up this 15-minute supply zone because it had a strong drop. So it's kind of like shooting pool, or if you shoot 9-ball, right? You have to kind of, on that sport, you have to constantly look 3, 4, 5 moves ahead, to try to make sure you place your ball wherever you want it. That'll set you up for that next shot. That's really kind of how I attack supply and demand zones. Hey, I'm looking ahead. I'm looking behind and ahead in this case. So I'm looking behind to say, what did previous supply and demand zones do? Are there supply and demand zones hiding in here that could potentially cause havoc, cause problems? So I looked at that supply zone because look at the volume candle. We have big red volume spread analysis candle. That's a lot of institutional type activity taking place. They're the ones that make those candles. So I saw that on a big downward candle. Now, because I'm looking at this on a 15-minute time frame, I see a big wick as well. Okay, well, where did the bulk of that volume come from? Did it come from the downwards body, or did it come from a rejection from the wick at the bottom end of it? Well, just keep going down to smaller time frames. Right? Go over here. Okay, here's that same 15-minute candle. The biggest candle had the most volume, but then the candle right after is like a quarter of the size or a third of the size with just a little less volume, but still a lot of volume. Okay. Well, that tells me that it's probably going to be stopped in its tracks, at least for a while. Because if this candle were that small, yet the volume was that much, okay, then I'm expecting it to stop. If this volume down here were a lot less, if it were like the size of one of these green candles, then the effort would have matched the result. And I would have been more interested in seeing this as a continuation. hey, we're going to probably continue. But because the candle shrunk, but the volume was still elevated, that just told me that there were a lot of buyers holding this thing back. Now, I'm not saying that that would completely reverse, but as you can see, it just went sideways for a while after that. And I was waiting on a break of structure, so at least that 15-minute supply zone to be broken before looking for a retracement back. I just didn't get it because what happened? Price went through the rest of that 4-hour demand zone and bounced into an old zone, which is that light green one you see below. Okay, this light green box, that's a previous demand zone that had been mitigated. So do I want to be buying from zones that have been touched? Okay. No, I don't. Well, Tiger, you had a VWAP line right there. That VWAP added some confluence, right? Okay. I put my anchored VWAP to the bottom of this swing low back here. Doesn't that make you buy? Doesn't that make you want to buy? Well, yeah, I was sitting here with my finger over the buy button yesterday, but I kept getting downwards closing candles, lower lows, lower highs throughout all these candles. I did not get a break of structure. When did I get the break of structure? 2 a.m. this morning when I was asleep drilling on my pillow. So this move could very well just run off without me. It very well could just keep going, right? But I also know that it's bouncing into some overhead supply up here. Okay. With a lot of volume. Look at all this volume spread analysis activity happening on this down move. Okay. So you could potentially get some bounces from this. So ultimately, if this thing comes down, then I would be more interested in looking for a demand zone in this impulse leg, because this is turned into an impulse leg now because it's kind of broken all this nonsense over here to the left. Okay, some structure points. So at this point, again, it may not happen. It may just run off without me. But if it comes back down, get rid of some of these lines over here. If it comes back down, then I need to see, do I have a demand zone down here? And to be honest, I don't know if I do, because I have a lot of undecided candles, indecision. Yes, the price is going up, but it's going up very slow because these are 15-minute candles now. And yes, we did break the structure. So where's my closest demand zone? Well, let's take a look at this. So to me, all this looks like a pretty efficient market structure, meaning candles are overlapping candles and bodies to the left and to the right. So there's no gaps. I'm looking for the first gap. Do I have a fair value gap? Looks like it might be in this area here. So yeah, I would call this a gap. I would call this a demand zone. So there's a 15-minute demand zone because you got your gap above it, your runaway gap. Okay, now price tried to close the gap, but it did not reach the unfilled orders. So that's a 15-minute. So it's still valid is what I'm saying. I just want to see what that looks like on okay. So a 30-minute, okay, there's your 30-minute demand zone. We're talking about the same spot. Let me just for kicks see what the 1 hour does. Okay, 1 hour. So I went up to 1 hour. So I can keep it basically the same. Push away. Yes, some of the gap filled, but the zone did not get touched. We've broken the structure though. And remember, all these candles and wicks overlap. That's the first place where I have a gap. So right there is where I'd be interested in putting an alert to see about a potential retracement to take those unfilled orders and go long. So I'm going to put this alert up real quick. And then we'll get over to your pound dollar Theta. Take a look at that here in just a second. But yeah, just to recap this, we have the benefit of knowing that it got slowed down by one 4-hour demand zone. It took whatever might have been left from this mitigated demand zone as far as unfilled orders. It bounced off of that higher time frame swing low anchored VWAP, which is a dynamic support and resistance line all on its own. Big banks and institutions love using VWAP. A lot of you guys love using VWAP. It's a great tool, but I use it not as a reason to buy. I use it as a filter. Hey, is price bouncing into a zone that I kind of like? It's passing all my rules, but something in my gut is just telling me, I don't know. Okay, just like this one, something in my gut told me to wait on this one. That's why I didn't buy into it, because of the way the candles weren't really turning around on this decline. Now it finally did, but it did it when I was asleep. But even so, I'm looking for the retracement. So far I don't, so far we still have this, higher time frame, lower lows and lower highs, but I'm more so looking at on the smaller time frames. Okay. So anyway, yeah, if we come back, then this is basically me obeying my rules. Broke structure, return to a newly formed demand zone in its wake, and then buy. That's how you confirm. That's how you confirm. Now that's the thing, guys, and this is where subjectivity comes in. I'm looking at this on these structures on a smaller time frame. It would be even safer if I'm looking at the 4-hour demand zone, the demand zone on a 4-hour time frame. It would be even smarter if I waited for a break of structure on a 4-hour time frame. But that's way the hell up here. Meaning I would need to do this. I would need to wait for price to break up here and then come back to a newly formed demand zone for an upwards buy. So, that's the ultimate, but sometimes you just got to get in the game. You know what I mean? Got to get in the game. So that's why I just simply, at this point, I'm going to rely on the fact of this, that we did have this, 15-minute break of structure. And then I'm looking at a 1-hour demand zone. So a lot of moving parts on this thing. Yeah, even on a 1-hour, that's a break of structure. Okay, we broke this line here, right? So now I just need a retracement back in the demand zone. So I feel like that might be a good option, a good setup, if we get the return. And so far it's looking good. Okay, that previous 1-hour candle, pretty decent move down. So could we continue to get this movement? We'll see. Just one more word of caution on this demand zone. It is only about a 4 or 5 pip zone, so it's kind of narrow. So I'm going to have a pretty good wick coming in this, maybe a 5-minute time frame, 1-minute time frame. Okay, it almost turns into a scalp trade at this moment, because if we come down on a 1-minute time frame, I need to start seeing a big strong wick underneath, a rejection wick, or a bullish engulfing candle, or some pretty strong volume start kicking in to make me feel a little bit more comfortable of a confirmation entry, a confirmation reason to get into that trade. So a lot of moving parts. Hope that makes sense. But yeah, let's go check out your theta. Let's go check out your pound dollar. So pound dollar is a bullish 8. So it's a really nice bullish score. Okay. So fundamentally and sentiment analysis wise, we're looking good. This is definitely a buy. In fact, yeah, let's see. Yeah, you've got 4 items going against it, but you got way more blue boxes, meaning boxes that are favoring the pound over the dollar. So it's looking good. All right, pound dollar. La 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 la. Okay, let's go. Always start at a daily. I like to turn off my drawings sometimes and just look at a naked chart. Okay, just looking at this naked chart, we've broken this structure all the way over here to the left. Obviously, we've broken that one as well. So on a daily chart, I'm most interested in leg, this part. So you had big, strong uptrend. You had a 2-3 week pullback. And then you had the resumption of the uptrend. So I'm really most interested when we step out from a higher time frame. I'm really most interested in the most recent swing low and swing high. Okay, when I'm talking 4-hour demand zone trades, right? Now this is where curve analysis comes in. Okay, our trend-based fib extension friend, we go and we line up to the bottom of the swing low to the top of the swing high, and we're breaking this thing down into quadrants, breaking it down into thirds, right? We're doing this to find out, are we low on the curve? Are we high on the curve? Well, right now we're in the top third quadrant, right? So that means we're high on the curve. What does high on the premium? That means if you're buying, you'd be buying in premium. means you'd be buying at a high price. If you're selling in premium, which is exactly what you want. So if you're buying up here, and again, pound dollar is giving us a bullish fundamental and sentiment analysis reading. If we're buying up here, we're buying crab legs, expensive crab legs. If we're waiting for price to retrace down here, we're buying crab legs half off. Okay? We want to get that expensive stuff as cheap as we can. The way you buy and sell anything in trading is the way you buy and sell anything in life. Okay? I say this periodically, but if you go to the mall and you see a nice jacket that you like, it's maybe a $250 jacket. You really want it, but you don't dollars. So perhaps you wait a week, you come back, it's been dropped to 200 bucks. Maybe you wait another week and come back, or 2 weeks, it's been dropped to 150 bucks. Okay? Maybe you come back the week after, it's 125. You think, okay, it's on clearance, I can get it at $125. So you can either, be aggressive and pay $250 for your jacket up here in this top third, or you can wait a week until that jacket comes down to 125, 150 bucks, where you can buy it. Okay. That's how buying and selling works in markets. So yeah, you can pay that expensive jacket, or you can wait till it goes on discount. Yeah, I'll get to your VWAP here in just a second, Thedo. So just finish this part up though. But yeah, that's what I like to do. So for me, I always look for the daily and the 4-hour demand zone confluence, which you guys see right there. Okay. Buy it, expecting price to move it to the next highest supply zone. So down here, I got my daily demand zone, and then there's a 4-hour demand zone inside of it. So there's my confluence. That's why the colors look a little funky, because I'm looking at this daily candle with a gap. Okay. Top of that wick to the bottom of the wick, 2 candles over. That's your gap. That's your runaway gap. Okay. And then we just go down to a 4-hour. Same thing. Excuse me. Do I have a 4-hour demand zone inside of the daily demand zone? Well, yes, we do. We got that candle right there. Okay. And that candle produces a gap as well. So I've got my acceleration gaps on both time frames. And I'm going to delete that because that's old news at this point. So I've got acceleration gaps. I've got demand zones. I've got unfilled orders. Everything's looking pretty good. Now, the only thing to be a little worried about is the fact that we have 1, 2, 3, 4, 5, 6, 7, 8 basing candles. You got quite a few here. 8, 9, 10, depends on how you count these. So that might be a lot of time for the banks to be chilling in this area, buying up their inventory, accumulating their position that led to this big up move. So that's definitely something to be aware of. And obviously, guys, there's always give and take in these trades, because what may look good on a daily, which it does on a daily, because if I'm looking at it on a daily, I would basically be looking at this as your leg in, your leg up, and then your 2 basing candles. But in my case, I just like to dwindle it down to the candle before the push away, right? Rather than making my demand zone that big, right? I just want to go for the important part of that trade. Remember, the candle, the actual real body of a candle, is where the bulk of trading activity typically takes place within that candle. So there's typically less trading activity that occurs in your wicks. Okay. If you're looking at it in the scale of volume profile, right? Looking for point of control. You're looking for your value area high, your value area low, and then you find your point of control somewhere in the middle. That's kind of the same thing with the body of the candle itself, right? That's where the bulk. So for me, I don't really care about this top part of this wick over here. So that's why I'm not interested in, drawing up my demand zone to look like that. I'll just go down to the last candle itself before the strong push away. So that's my daily. But yeah, it looks great on a daily. But yeah, then when you go down to a 4-hour, like I said, it looks like a lot of candles here to the left. It's 2 days worth of candles. Oh, just for kicks, let's go down to a 1-hour, see what our gap looks like, because that's ultimately what can be the decider. Okay, so down on a 1 hour, there's my 1 hour downwards candle, indecision candle. Remember, it's got to be an indecision candle, typically, okay? Indecision candle meaning a doji. Give me a candle with wicks above and wicks below. That's indecision. That's buyers and sellers, temporarily agreeing on price. Right? What do we do? What do we do? We're all in agreement right here. What do we do? Well, at some point, the price leaves. And in this case, we left here and we had a gap. So I'm going to I always just, rather than putting, 2 or 3 rectangles in there that are the same color, I just got to the point out where I just like to take a white line, a white dotted line, just put it at the top, the proximal line of the demand zone. Or if it were a supply zone, I'd be wanting to put it at the bottom of the supply zone, just to show where that 1 hour candle starts. Because that's ultimately where I'd be wanting to buy, is on the 1 hour. Because I've got the confluence of daily, 4 hour, 1 hour, all in the same point, all in the same zone. That's confluence, guys. That's what I like to trade. That's some of the best trades you'll ever find, is when you're finding different sets of eyeballs looking at the same spot. So I'm going to put my alert down here, and we'll look at some smaller time frames, Stato, here in just a second, that are higher up on the curve. Okay, but from a higher time frame, this is where I would be interested in. So I always just throw my alerts out a week out, or in this case, just till the end of the week. I always reevaluate all my alerts on Saturdays, Sundays, over the weekend, and then I just throw fresh alerts on, like I've got over here. I throw them on, Sunday to get ready for the week. So yeah, I'll just throw this alert on through then, but I do want to put my alert at the proximal line of the daily demand zone, just so that I have a little heads up. Hey, Tiger, we're about 20 pips away at this point from the zone, from the 1 hour demand zone, and then I'll reevaluate it at that point. And usually I'll just put a new alert on 2 or 3 or 4 pips ahead of the demand zone itself, and be ready. Have my order waiting. So that's your higher time frame. Now let's go look at some smaller time frames. Where's another swing low? Well, you had all this sideways basing action right here, and then you had a strong move out. So we might as well isolate this little bit of a swing low to the swing high here. See if we can't find a demand zone in here, right? Well, as you can see, I've got one up here. Oops, I didn't mean to do that. So I've got one here. I've got a demand zone there as well on a 4 hour. But this is kind of the same thing as what we saw down here. This is a 4 hour demand, but there's a lot of candles to the left. So I dislike that from a 4 hour time frame. So yeah, stepping down to a 1 hour though, there's your 1 hour demand zone. It's kind of a small looking candle. But we're looking at this candle here. So on a 1 hour, it looks a little bit better. Yeah, and it depends on the subjectivity of how you classify this. Is this your leg in candle? Is this red candle your leg in candle? And then your one candle of basing and then your leg out? If so, that's a pretty good looking candle right there. Obviously, we'd be doing our curve analysis from down here to up here. So this would be the bottom third. This would be your discount zone. Okay, so we want to buy, just to go back to the daily for a second, we always want to buy, like I said, we want to buy in the bottom of the curve. We want to buy down here. But again, this is higher time frame. Everything changes when you change time frames. So yeah, going back to the 1 hour, okay, this is our new curve analysis down here. So this is our new bottom third. So that qualifies to buy down here. Okay, so if you're looking at a 1 hour, buy and demand, close at the top. Make sure you're not bouncing into an overhead supply zone, which up here, everything looks like it's pretty mitigated. So I'm not really worried about any supply zones up here. See that wick right there? That wick took out that supply zone candle, that wick right there. So it's an efficient structure. There's no inefficiencies right here I got to worry about. So if that's the case, then I'll just put on my buy trade down here and just close it up here at the top of the structure, the wick. Maybe down a little deeper. That's why I stopped just a little bit, lower over here. So that would be your 1 hour demand zone buy. I want that green. That would be the lowest I'd be willing to go on this thing. I do like that demand zone. You know, the volume kind of was strong. It wasn't the strongest. This is where your volume is right here. So we're talking right here. So we could potentially isolate this candle right here, right? You see how the volume, the VSA candle was yellow down here for the candle? It's pretty strong. That's institutional type volume, and that's why I've got my alert set just ahead of it. Okay. That is the bottom one. But this candle was just out of the zone. But I still want to watch it, and that's why I've got my alert there, okay? Because I might end up just using this as the demand zone instead. Why? Because the volume picked up. Okay. The volume picked up right there. We'll just, let's see. Let's just, we'll just leave it. Got a lot of green on it. But yeah, that's the reality because that's where the volume picked up. So that's probably, that's 137.12 area. Hey. So that might be a good spot there. Bottom third, discount zone, good place to buy. As far as indicator name for the VWAP, yeah, it's just VWAP. You just go onto here, onto indicators, and just simply type in VWAP. Volume weighted average price. There you are, my friend. Just put a star around it. Was that your question, Dato? I think that's what you were asking. Yeah, just simple VWAP, volume weighted average price. But the important thing is I like, oh, by the way, I should have told you this. So when it comes to the VWAP, so I've got it as a favorite up here, but you can find it over here. Let me see here. Which one is it? I think it's a little lower. Where are you at, VWAP? It's over here on one of these. I have it as a favorite, so I don't click on these boxes over here very often. Where is VWAP? It's over here somewhere. I'll find it in a second. VWAP. Where is VWAP? Here it is, right here. So you click on the, this little box over here on, if you're on TradingView. Same place you get your long and short position tools. You got a ghost feed and you got all kinds of other stuff, but anchored VWAP. That's it right there. And then just mark it with a star. That way it saves it at the top of your screen. I do the same thing with fixed range volume profile because from time to time, I do like to see what the demand zone itself has as far as volume goes. So I'll take that, take a look at my demand zone over here and just look and see where's my point of control. Did that not click? Yeah, there we go. Okay, right, point of control. Candles. Shows, it spits out my point of control, which is that white line. In other words, where was the volume the heaviest, the highest? Because sometimes I'll have a zone that's real big and you're wondering, you're like, well, I've got this big ass zone, but where do I want to actually, punch the order in? Obviously, I go into the one, smaller time frames to look for a gap. But even then, sometimes the zones can be pretty big. So yeah, I like to use the volume profile tool for that. Hey, where's the heaviest, thickest concentration of volume in that range? And this is a really cool tool because you can match, you can move it, anywhere you want, and it'll do its calculation and show you, okay, the heaviest volume, and then again the point of control, meaning where's the thickest volume in the range that you created. So anyway, that's a really cool tool. I save it as a favorite as well. So what the boys on the futures streams used a lot. Okay, point of control. Found it. Awesome. All right. What else we got, ladies and gents? I've got about 25 minutes here. Yeah, the New Zealand. So let's look at Aussie Swiss because that's another one I was keeping an eye on. I mean, I'm keeping an eye on a lot. That's the thing. I've got an embarrassment of riches right now. There's a ton of stuff. Let's see here. Oh, that's the one. Never mind. This one we just looked. No, that's New Zealand Swiss. I need to look at Aussie Swiss. Aussie Swiss. There we go. So Aussie Swiss looks a lot similar to New Zealand Swiss. The only difference is it has not hit the demand zone yet. Just missed it. Look at that. Hit the V up. Just missed the demand zone and then took off. You son of a gun. It broke the structure, which is what I like to see. So I just need a return. Guys, I like to look at basically when I'm trying to buy or sell something, my whole goal is to get price to go sideways and then break the top, break the low, break the top, break the low. And when it breaks the low again, this is where I want my demand zone to be, to buy and actually look for a trend. So in other words, here would be my demand zone. Okay, consolidate, test the highs, take out liquidity up here, push below and test the lows. So I'm talking about the highs here, the highs of this. All right, guys. I lost you there for a minute. I don't know how to get this thing fixed. All right, I'm back. I'm back. Oh, and by the way, I saw the results, guys. It looks like most of you, 75% of you, think that the FOMC report today, the FOMC release, will stop the bleeding. So it will stop the dollar in its tracks. And I have to agree with you. Now, obviously, if we get anything lower, it's going to be, it's not going to be that way. But if we take a look at the CME tool, the CME Fed Watch, and we take a look, get all this crap off my screen. Okay. We're at 97%. So it's basically staying the same, 97.2% to be exact. You still have some hopefuls that it's going to drop a quarter point, but it's staying the same. Okay. It's the bond market predicting this, showing their activity. Think of that as their sentiment analysis. All right, so there's FedWatch tool. Going back over here. But yeah, sorry, guys, before my chart was cut off, I was going through a basic understanding of how accumulation and distribution works on a smaller time frame, or from the master pattern perspective. Because this right here, keep in mind, this is our demand zone. Or, well, it is a demand zone, but it's not the demand zone I'm after. So there's your consolidation. Okay. And remember, at some point, the price will move above or below this box. So in both cases, though, because it's a sideways move, you've got stop losses above the range, stop losses below the range. So there's your stop losses above. This is on the people in this area that shorted the market. So they short the market and they put their buy orders up here, which is their stop losses, right? Opposite of a short is a buy order. So the banks wait for price to leave this area. In this case, it moves up here and locks into those buy orders, which is what banks need to fuel their sell orders. So then what happens? Then price goes down because the big banks took advantage of those buy orders to fuel their sell orders. And then they come back down here below the range where there's another pocket of liquidity waiting on them. In this case, it's the buyers that want price to go up. They have to put their stop losses below, which are sell orders. What do banks need to fuel their buy orders? They need sell orders. So the banks collect this liquidity right here. And this time they're pushing price up above this high because there's more buy orders waiting on them. Okay. They got this pocket of buy orders, but these short sellers in this area that pushed market down left their stop losses. So the process can repeat as a lot of times. But what I like to do to take advantage of, and oh, by the way, these buyers here that push price up to collect those stop losses, they put their sell orders down here, they put their stop losses, which are sell orders. So what I like to see is this expansion behavior, because it's basically building a position for the banks. And then ultimately, I like to see price come and collect that last bit of liquidity and bounce just a little bit deeper into the unfilled orders from the demand zone. And this is where I like to buy. Okay. That's really kind of the anatomy of the market and how it works. And oh, by the way, right, this process continues up here. There's short sellers right here, short sellers that put their buy orders. Okay. So the liquidity pockets keep moving with every swing low and swing high. The question is how much liquidity is in there. We don't know that, okay, especially on the currency market where we don't have the centralized volume. So that's a basic anatomy. So I want to see this manipulation structure happen, ideally at least once or twice, right? I at least want to see one break a structure up and then break a structure down. In this case, it broke the structure twice. This thing could do 4, 5, 6 leg outs or fanning out process or the megaphone pattern. Okay. But in the basic master pattern structure, you got your consolidation, you got your expansion, and then you got your trend phase. I just so happen to want my trend phase to start in a demand zone, a strong demand zone that had a gap up in an uptrend with a bullish bias on the fundamentals and the sentiment. That's a perfect trade setup for me. Right. So that's kind of the breakdown there. So I thought I would just break that down a little bit in case you guys were wondering how the anatomy, kind of works. But yeah, as you can see, we're still a ways away from this 4-hour demand zone. So there's really not anything I can do at the moment. Low on the curve, demand zone, gaps, strong move up, breaks the structure. Only thing lacking is the volume, the VSA candles. This is a -1 for me. So even though it is low on the curve, I'm still not going to put on a full position. A full position for me is 0.5%. That's just my risk tolerance. But in a situation like this, I'll probably drop it to a 0.2 or 0.25%. So just take off some of the risk because everything else looks pretty sound. Oh, by the way, it'd be going through the VWAP again. Okay. And I might even have another VWAP, anchored VWAP from this point. Let's take a look at this swing low. What do we got from here? Okay. So I put a VWAP to this swing low. Now, if I zoom back into my 4-hour, by the time price rolls around to this demand zone, perhaps this VWAP line continues in that direction. Perhaps price eventually meets in the demand zone and bounces off the VWAP as well. So again, it's just an odds enhancer. The VWAP for me is not a buy or sell signal. It is only an odds enhancer as long as price bounces into a supply or demand zone. Bookmap, Theta. Yeah, it just doesn't work. It just doesn't work with currencies, unfortunately, to my knowledge. I mean, Daryl, my friend Daryl, he uses Bookmap. I don't know a whole lot about the Bookmap. So I don't know. I guess the answer is I don't really know how Bookmap would work on currencies. Now it works in the futures, the currency futures, because they have a centralized volume for that. Okay, Chicago Mercantile Exchange is where they, what facilitates all that. But I don't know. I don't know how actual Forex pairs would work in Bookmap. I don't think it would be very accurate unless they somehow figured out the VSA way of throwing volume in, the volume spread analysis. In other words, the tick volume. So I don't know. It's a good question. I'll ask Daryl about that because I am kind of curious about that. Because I'll probably be starting to trade some currency futures here in the near future. As soon as I learn how to use Tradeify, again, that's the free account that I won. I took one look at it yesterday, and it was like reading a foreign language. Obviously the tickers, you got to learn the tickers, and the way the platform works, the lots. Now I think it calculates the percentage, the per trade percentage on there, which is all I care about. As long as it does that, I'm stoked. I'm happy. So I think I figured that part out of it yesterday, but I'm just not 100% sure. In other words, I'm not going to activate the code until I learn the platform itself. And it might take me a few days. But anyway, yeah, Aussie Swiss, there's my position, guys. Right there. Potentially at some point we get price to come up, we come down and meet the VWAP and the unfilled orders. And by the way, there is liquidity under that swing low right there. Okay, there's going to be liquidity inside of this demand zone. There's going to be sell orders inside of this demand zone from these buyers that pushed price up. Banks need sell orders to fuel their buy orders, along with unfilled orders for a move up. Bam. Okay. And then, a lot could happen from here to here. Aussie Swiss, which is a plus 14, could drop all the way to 0. Okay. So that would obviously be a bummer, but if the top setup score goes down, then that pretty much negates this. Now, it still looks good on a technical trade, and perhaps I would take a trade on a very small percentage just from the technicals only. But the full risk comes when it matches the edge finder. Okay. All right. What we got? 12 minutes. Might make it. New Zealand yen, New Zealand CAD. Take a quick look at that. So here's New Zealand yen. Okay, you see I got some demand zone confluence all the way down here. So we're still a ways away. So yeah, not a whole lot going on in this area. This is just nothing more than a retail chop zone. Okay, this is 4-hour chart, but you got all kinds of consolidation. So this is ideally where I like to start seeing my consolidations take place, which we're getting. So now, just like the example I showed earlier, okay, so again, that's our consolidation. This is where I like to see the master pattern kind of play itself out. In other words, break the structure, okay, collect liquidity up here, price move down into the demand zone to collect the stop losses that are down here to fill their buy orders along with these unfilled orders for a long position. So there would be your long position example. Oh, my cat's meowing. I hear it. Delete that. So consolidation, the banks are waiting for price to leave so they can start their manipulation. In this case, we've got buy orders up here. Okay. From all these short sellers. These shorts have put their stop losses up here. That's buy orders. And then the same thing happens on the bottom side of it, where there's sell orders down here from these traders that bought in this bottom quadrant, the bottom section of the consolidation. Okay. So banks come up and, the banks come up and collect this liquidity. Now they're chasing this liquidity and they're chasing these unfilled orders. That's an ideal trade right there. Ideal trade. I like it better when it does that because it starts the manipulation process rather than having price just drop straight down into a zone, right? I don't like that. I want to start seeing the manipulation happen. The manipulation happen to build the position. So that's the trade set up on New Zealand yen. If this just drops straight down into the zone from here, might be a little sketchy because then I'd have to worry about the fact that got all this consolidation up here. But if it does this first, where it goes up and then drops, then I've got a, this downwards leg pretty much, for the most part, negates that the worry of this turning into, potential landmines. In other words, versus if price were to just come straight down. If price comes straight down from here like this, then I got to worry about potential hidden landmines or supply zones in here that could bounce price back downwards. But if it comes up here first, then it kind of washes away everything. If that makes sense. Hopefully that makes sense. That's Kiwi yen. What else we got over here, boys and girls? We got New Zealand dollar. Let's take a look at that. New Zealand dollar. Oh, by the way, let's go take a look at the calendar real quick. Okay, yeah, that's right. So yeah, Bank of Canada, that's another hour. So we don't have anything to worry about here. Kiwi dollar though. So Kiwi dollar, we are pretty high on the curve. Okay. Daily chart, everything off. We got our swing low, daily swing high. So just like a lot of these other Kiwi pairs, okay. It's given strong signals, but it makes sense. It's already pretty high up. So on a higher time frame, I need a retracement clear down here. But you see, I got an alert up here. So let's go look at a smaller time frame and see what I got. 15. Oh, come on. Let's get rid of these lines for a minute. VWAP. I like using it, but every time it kind of crunches everything up. So anyway, if I look at a 15-minute, there's my swing low, swing high. Do I have anything down here? Do I have any decent demand zones? Let's go look at a 30 real quick. Right here. So there's my 30-minute zone. But I also have one down here. So let's go to a 1 hour real quick, actually. I can't use this as a 1 hour candle because that wick touched it. So it's mitigated. That means it's an efficient market. Remember, we like to tackle inefficiencies. So on a 1 hour chart, this candle right here would be the first candle with a gap. So I need to actually move my alert just a little bit higher because my gap is from here to here. So it's outside of the zone, which is a little bit of a bummer, but that's not too far away. Okay? It's not like that far. So potentially I'd be buying off of this 1 hour demand zone, this 1 hour candle, which is inside of the 4 hour. If we just go back to the 4 hour. So in this case, I would look at this. I would look at this as a leg up candle over here in the past. I would look at this as a leg down or a leg in, and then 1, 2, 3 basing candles. So if you wanted to fulfill the whole basing structure, it would look like that because we'd incorporate the wick. But remember, the bodies themselves are where the bulk of the trading activity takes place. So for me to shrink in the range of the box a little bit and just slightly increase the reward to risk, that's why I just isolate just the candle itself before the move up. Okay. So it just basically takes out that little bit of range from the top of that wick to this one here. All I care about is the last candle before the spike up, the big move up. Okay. So that's your 4 hour. Again, we go to the 1 hour. We got the gap up here. And we might as well take a look at a 30. You see the 30, there's a gap there as well. But I'll just leave the gap up here because that's the 1 hour. And then lastly, just go to a 15 for kicks. Okay, there's some gaps down here. They're kind of small and annoying. So because those little gaps exist, I would incorporate my stop loss under the whole 4 hour zone. See, if all this were efficient down here, I'd be okay with putting my stop loss below the 1 hour candle. But because I've got to deal with these annoying little tiny gaps down here, see from here to here, there's a gap. I got to incorporate the whole 4 hour zone as my stop. So in other words, my stop loss would just simply go under the 4 hour demand zone. Just like that. And there you have it. There you have it right there, ladies and gents. That would be the Kiwi dollar. Now, it did bounce into overhead supply, as you see, this red box up, red rectangle. I don't know how far back that goes, but yeah. So I don't want to be buying anything up here. I want to wait for at least some kind of discount on, one of these lower time frames. So easy on the risk, a little bit of a teaser trade, little, toe tap. But ultimately, the higher time frame, higher probability is going to be a long ways away, over 100, 150 pips away. And there you have it. So anyway, ladies and gents, I'm going to have to hop up out of here a couple minutes early. I got something I've got to do ASAP. So I'll be back on, Trader Nick's stream here in just a little while, 12:30 my time, 12:30 Central Standard Time. So definitely come check him out. As always, go over here to @TraderNick, and you can find his live stream. As far as mine go, guys, and I'll end it on this. So yeah, definitely show me some love. I appreciate everybody that does pop on. I know it's a small, humble crowd at the moment, but hopefully we'll grow this thing. I did add on yesterday kind of a little bit of a funny recap video. Okay, daily Forex recap with puns and humor. It's only about 3 minutes long. Go watch that. Let me know if you guys think that's silly, or is it pimp, or is it gimp? Because at the end of the day, trading can be boring, right? So I just try to throw some humor in there, some puns. Okay, it's just like when I was doing the news piece at Prime. I'd always liven the crowd up. So you guys tell me if you like this and think I should do more of it. once a day, once a week, whatever the case is. And I'll take that into consideration. So with that, have a good day, ladies and gents. I got a bolt. I'll talk to you later.